Hello, and welcome to Virtual Investor Conferences. My name is Cecilia, and on behalf of OTC Markets, as well as our co-host, Murdoch Capital Partners and TAA Advisory, we're very pleased you've joined us for our next live presentation from Moneta Gold. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you are interested in scheduling a meeting with Moneta Gold, please click on the Meetings tab found on the left navigation bar. You will be able to view the company's availability and submit a meeting request. On a final note, all today's presentations will be recorded and available for 24/7 replay. At this point, I am very pleased to welcome Gary O'Connor, President and CEO of Moneta Gold, which trades on the OTCQX Best Market under the symbol MEAUF and on the TSX under the symbol ME. Welcome, Gary.
Thank you, Cecilia, and thank you for the opportunity to speak today. Today, I'm going to give an update on Moneta Gold and notably on our recent PEA, our Preliminary Economic Assessment, which was published last month. We're really pleased with the results. We're very happy with the way the project is developed, and we're happy to be able to give an update to our shareholders and potential investors. I do point out there are forward-looking statements in this presentation here today, and I bring you all those watching to be aware of those. Moneta Gold, we're a TSX listed company as well as the OTC. We're on the main board. As mentioned, we're under the ticker ME. On the OTC, we're under the MEAUF. We're located and focused in Ontario in the Timmins camp. Our focus is gold. There's gold in the Timmins camp. It's a tier 1 location, great infrastructure, highly skilled workforce, multiple operating mines in the area, and great infrastructure. We've just completed a resource update as part of our PEA. This now contains a combined 4.5 million ounces indicated and 8.3 million ounces inferred, including both high-grade underground and large tonnage open pit resources. The PEA has come out with very robust economics. It has both good size, great production profile, and of course is located in a great location. We also have a pipeline of projects. We won't present those too much today. Today we'll focus mostly on our main project, the Tower Gold project. However, those over the coming months and years will form part of our pipeline of gold development projects in the camp. The PEA on Tower Gold, it had a NPV of 1.07 billion after-tax Canadian dollars at a 5% discount rate, has an IRR of 32%. This is all at $1,600 gold US and a 2.6-year payback. We produced over 261,000 ounces a year for the first 11 years. We process 7 million tons per annum, and the life of mine production is 4.6 million ounces. We're well on the way with a infill drill program. We've completed well over 60,000 meters. This is all resource upgrade drilling. So we've already commenced our pre-feasibility work. We've put out our bids for hydrological work, geotechnical work, metallurgical work, as well as we're well on the way with our EIA and community engagement programs. So our EIA, as mentioned, studies will be completed at the end of this year for our initial baseline. And we're well on the way with our PFS studies, including the infill drilling. Timmins itself is Canada's most prolific gold mining camp. Over 85 million ounces have been produced here over the last 100 years. The area is located 700 kilometers north of Toronto. Good road access, rail access, all of the facilities and infrastructure you need for a major mining project. We own all of our ground 100%. We own both the land surface rights as well as the underlying mineral rights. We have no royalties on the Golden Highway portion of the project. That comprises about 80% of the ounces. And on the Garrison project, we have on an average about a 1.5% royalty, of which we can buy back approximately 0.5%. The project, as mentioned, low capital, great infrastructure, and good economics. And due to our ability to connect to the grid in Ontario, this results in an industry-leading low-carbon footprint. The highlights of the PEA showed great economics. The NPV at a 5% discount rate of over 1.06 billion Canadian dollars. This is after-tax dollars, 32% IRR, and this at a US $1,600 gold price. Payback 2.6 years. First 11 years, 811 US dollars per ounce cash cost, and for the life and all-in sustaining cost of 1,004 US dollars per ounce, all-in sustaining cost. Life of mine production, 4.6 million ounces a year, over 260,000 ounces a year for the first 11 years. Processing 7 million tons per annum. Life of mine, 24-year mine life. Peak production in year 6 of over 368,000 ounces. This is comprised of both underground operations as well as open pit. We've staged the development of this to conserve initial capital. We bring in many of the capital costs as we develop the project and fund them out of cash flow, reducing the need for upfront capital. The average grade for those first 11 years is 1.3 grams per ton, and we maintain that over those years through blending, underground high-grade ore and open pit ore. The initial capital for the project, 520 million Canadian. That involves delaying a lot of our upfront capital, delaying the equipment costs, leasing those initially, delaying the development of the underground till year 1. This is just for a very small footprint in the Garrison area. Wet tails, a very efficient tailings dam. Sustaining costs, they're 886 million life of mine for a total capital cost of 1.4 billion Canadian dollars. There's a very robust profitability index of 2.1, and peak investment is at 520 million Canadian dollars. As mentioned, we talk about underground operations, 900,000 tons per annum. That's about 2,500 tons per day, blending with what is 6.6 million tons of open pit production. We stockpile low-grade ore. We pre-strip with the same equipment. That over mining gives us that flexibility and maintains a good flow and manages to maintain a steady feed to the mill. We're currently working on some of our opportunities to increase the value of the project. That includes in-pit drilling areas which are currently waste due to a lack of drilling, sampling old core, historical core that was not sampled, currently is classified as waste and zero grade. We do have the ability to expand the mill after 11 years, maintaining that production profile, as well as increasing our underground resources. That also will increase our production profile after year 11, noting we have 11 years of underground production. And of course, we have plant site and project site optimization that is currently underway. The company currently has 102 million shares outstanding. There's only a small amount of warrants, not a lot of options, 106.5 million fully diluted. Current share price, we're looking at about a value of about $150 million, 18 million in cash, good analyst coverage, and very good institutional ownership. We have many of the large institutions in North America. Shareholders, they've been very sticky. They've supported us through the years. They understand where we're going with what is a very large gold project and what its evaluation proposition will be. We've really developed a strong project development team. We now have the key people in place to carry this project through pre-feasibility. We will add as we need to, but we've got the core team in place now. A lot of experience on building, constructing and operating large gold mines, and a very strong, broadly diverse board. The project itself is located 100 kilometers east of Timmins on a major highway, Highway 101. Significant production in the camp. Many of them large producers are here. Newmont, Agnico Eagle. We also have Pan American Silver and McEwen producing in the camp. We consolidated the camp through an acquisition of O3 Mining's Ontario assets last year. We're now one of the largest landholders in what is a major prolific camp. Good roads, good infrastructure. The project occurs immediately adjacent to Highway 101, major sealed highway, Garrison, where our starter pits occur, are immediately adjacent to this. Golden Highway, just a few kilometers off on an existing highway. These are the resource pits. They occur in two major Temiskaming age sedimentary basins. Excellent potential to continue to expand these, notably underground, where we add significant value with higher grade ore. We have exploration agreements with the First Nations of Obatibi and Assiniboine, as well as the Wabun Tribal Council. And our environmental baseline is well under the way, and we'll have the baseline studies for the initial EIA completed, the field studies, that is, by the end of this year. The resource breakdown, this adds to the top. The totals are at the top here, so 4.5 million ounces indicated, 8.3 million ounces inferred, both open pit and underground. Breakdown of costs, robust costs. This is the resource assumptions for the open pits, so a 0.3 gram per tonne cutoff for the open pits and a 2.6 gram per tonne cutoff for the underground. The underground used a minimum 3 meter width. That is based on 3 meter scoops for the underground development, using longitudinal long hole open stope mining. The resources continue to grow. We added another 1 million ounces as part of the optimization of our resources as part of the PEA. This was 1 million ounces over the previous resource in May earlier this year. Over the last several years, we've continued to grow and expand the resource, and we're looking to continue to do that as we do infill and slight, resource expansion drilling as part of our PFS drilling. We released results today that showed continuous mineralization outside the current pits, and that leads both to upgrading the category of our current resources as well as potentially expanding those pits. We have great starter pits in the Garcon area. This is the Garcon area. Historical mining occurred here. Good grade, nearly 1.6 grams per tonne, 96.5% recovery. There's already been production in this area. We are proposing the starter pits in the same area, both Garcon 903, again, low strip, good grade. Remember, 1.3 grams per tonne for the first 2 years while we're developing the underground. The underground is developed on the Westaway and Southwest areas. This is the 1750 pit. So this is the global resource. So 3 open pits, the Garrison area, 5 kilometers between, and then the 2 open pits in the Golden Highway area, as well as the 2 large underground resources at Southwest and Westaway. Westaway is notably wide open. Looking at the PEA highlights, we talked about this is all done at a $1,600 gold price, exchange rate of 0.78. We're now significantly above that in Canadian dollars. 24-year mine life. We process 166 million tons of ore through the plant. The 4.6 to 1 strip ratio. That includes the overburden. The life of mine hard rock strip ratio is 3.1 to 1. The cash flow is about 110 million after-tax free cash flow a year, 1.9 billion life of mine. And that, as mentioned, that peak invest, the profitability index of 2.1, very, very attractive. Other key inputs of the project, we're mining 261,000 ounces a year, first 11 years, at a cash cost of 811 US dollars per ounce, years 1 to 11. We're mining all-in sustaining costs, 1,004, years 1 to 11. Peak production is year 6, 368,000 ounces a year. And life of mine, we produce 4.6 million ounces from a resource of 5.1 million. On average, we use a conservative 91.3 recovery. Each of the deposits has a separate grade recovery curve determined by test work completed to date. This is the PEA resource. So this shows what is phase 1 in the blue pits, phase 2 in the grey, and the 2 underground resources, Westaway, Southwest. We have not proposed any development at Garrison, although we have high-grade underground resources at Garcon. This is part of our upside that we'll be reviewing. You can see the underground shaft here at Garcon in the current open pit. Looking at costs compared to the other producing mines in the camp, we're very much in the middle of where current producing deposits are within the Timmins camp. We're very much in line with our peer group there, currently producing mines. So both our all-in sustaining costs and our cash costs are very much in line with our peers. Notably for a new project that starts at surface, it's not at depth, so costs would be expected to be less. Looking at the cash flow of the project, we see 2.6 years before payback. We cash flow well those first 11 years. We then invest in new equipment. This investment goes into developing the larger pits, the phase 2 pits. We then cash flow through those, and then the last 3 years we're processing their stockpile ore. There's potential to expand the pit at this stage. There's potential to add additional underground resources, and we're reviewing those at the moment. Looking at sensitivity, the project is very sensitive to the gold price and the grade. At a significantly higher gold price, the project has significant upside to increases in gold price, and yet it's still very robust down to $1,300 gold. So still a very robust project. Looking at the sensitivities, both for the NPV and the IRR, its internal rate of return. Again, this shows the same items, gold price and grade sensitivity, but not so sensitive to capital or operating costs. These are highlighted in the same curve. So again, the project can withstand increases in capital costs, operating costs, and benefit significantly from increases in gold price. So very, very much levered to the gold price. The projects are still open. We have the ability to connect up some of the zones. We have some of the pits we're drilling out now at 903, where there's been no previous drilling. We're looking to connect more ounces, more resources. We have underground potential at Garcon, where we have good high-grade intercepts, and we're looking to connect up these pits and add ounces as part of the PFS. Again, the underground here at Golden Highway, Westaway is wide open. Southwest has a number of zones wide open. There has been some drilling and results put on that earlier this year. There are more to come. Looking at the grade profile of the operation, we can see that where the open pit comes in, the high-grade underground ore, this increases our production. We're looking to increase that underground resource, can keep the production profile up. We have the ability to expand the plant at that stage. We could also increase production through a plant expansion, years 11 through to 24. You can see we could keep the steepness of this curve up, but this shows the current life of mine. Garcon, Garrison area, 903 deposits, all from Garrison the first 5 years. In the 5th year, we're pre-stripping the Golden Highway deposits. Year 6, we're mining 1.55 grams per tonne in the Windjammer area of Golden Highway. This results in significant increase in ounces. We then continue to mine through Golden Highway and accessing the low-grade stockpiles when required to maintain a steady feed to the mill. So like I had mentioned, significant upside here to increase the steepness here and add more ounces both underground and through pit expansion and plant processing capacity. Development strategy involves pushing as much as the capital out. We're mining 7 million tonnes per annum. It's about 19,000 tonnes per day, of which 2,500 is from underground. The other 6.6 million tonnes, the overcapacity is from the open pits. We phase the pits. We push out the underground development into sustaining. We push out the capital and the equipment purchase into sustaining. We have 12 years of underground mining. The average width of those stopes is 9 meters, so good solid blocks. The ramp access to the underground, it's a 2-year ramp up. And of course, there's no camp required for the camp due to our great location. Just comparing our capital costs to other projects in the area, noting that many of our peer group has to have significant infrastructure due to the location of their projects. Remember, we're in a well-developed camp, lots of infrastructure around us, roads, we have power access to grid power, access to accommodation, access to skilled workforce. We sit right in amongst our peer group, noting both our production profile as well as the size of the capital requirements. So we're not any outlier there. Upside, as mentioned, ability to expand the pits, expand the underground production, continue to expand underground resources, convert current waste into ore within our current pits. and that's through a combination of drilling and sampling of old core, metallurgical recovery upside, remembering this is a very favorable project. There's no acid rock potential from the test work done today, no deleterious elements, nice clean tails. We did a trade-off, dry stack tails versus wet tails, a very efficient dam for the wet tails. We've gone forward with the wet tails for the PA, but we have the option to do either. And then, of course, there's the timing of the decline. We could get in here early. We could build the decline before full permitting. We could get access. We could do trial mining, drill out the resource, and that's one of the options we're looking at now and looking to pursue to bring that underground development forward. From a valuation viewpoint, we're significantly undervalued compared to our peers. We're trading at less than $9 an ounce. We have significant upside there compared to our peer group. Remember, we're in a great location, safe jurisdiction right here in Ontario and in Canada's largest gold producing camp. And then looking at the P to price per NAV, and here we are significantly below our peer group average, and we're looking to have that re-rated as we move forward. Our stock price has been performing, well over the last 2 years. We've gone up considerably, given good return to our shareholders. The last few months we've come off like everyone else, and we're looking to rectify and that go as we move forward. And we're looking to continue to add value to our shareholders as we have over the last several years, and looking to give good value back to them. Looking at our plans going forward, we've completed the resource update this year. We've completed the PEA. We're already well on the way with our infill program. We've got nearly 70,000 meters of that completed. We have another 100,000 to complete by Q3 next year. Q4, we're looking at a resource update, and then the first half of 2024, completing the pre-feasibility study, at which time we will also commence environmental permitting. We should have a project description in hand by then. We'll have our environmental baseline all completed, and we'll look to move this forward while we are doing the feasibility study and then detailed engineering. The timing of the decline comes in, and we'll be looking to put the decline in during that feasibility phase, reduce the cost of some of the deep underground resource drill out, do that from underground, and move the project forward. So, yeah, a lot to do, but we've shown in the past we're able to deliver. We have the team in place to do it. We're well cashed up and looking to continue to deliver value and bring forward what is one of the new great major gold projects here in Canada. So on that note, thank you, and I'll move over to questions. Now, answering some of the questions here. The first question is, other than infill drilling, what else are you focusing on in advance of the PFS? So in addition to the infill drilling, we've already commenced hydrological test work. We're looking at geotechnical. We've got the request for bids out now. Those have been returned, and we're just looking to put together our favoured company to conduct that work. We have additional metallurgical test work to do. We have the EIA baseline to complete, and then the permitting requirements, and we have the community engagement programs. As mentioned, we have exploration and agreements in place with the relevant First Nations, where we have a impact benefit agreement with one of the First Nations, Abitibi, and we'll look to conclude a full IBA as well as with the other First Nation group, Beaver House as well. Second question, what are your key takeaways from your recent 43101 report of the Tower Gold? The key takeaways is that this is a very robust project, has good grade, 1.3 grams per tonne for those first 11 years, good production profile, over 260,000 ounces a year, great payback, good economics, very robust at lower gold prices and significantly leveraged to higher gold prices. We've managed to keep the capital costs down, a very smart strategy of delaying as much capital and a staged development approach. And so we see this as a great deposit and a great location and a great safe jurisdiction. So very robust, and we're now looking to continue to advance it. Next question. That's actually similar question. It really asks also what else is to be focused on advance of the PFS. I think I mentioned those key things there. Another question here, the mineral resources have increased a lot over the last 5 years and now total 12.8 million ounces total resources. Would this be one of the larger gold projects in Canada? Yes, it would. I think I showed a graph there before amongst our peer group, which is those companies developing gold projects. It is one of the largest gold projects. So we're looking to continue. We see the ability actually to continue to grow it. That won't be our main focus, but as we finish the infill drilling, do our other condemnation drilling, geotechnical drilling, there's the ability to continue to grow this and also drill out adjacent projects. So to continue our pipeline of project approach to the project as well as outline resources. These will all add value. What were the recoveries from the bulk sample that was done by Northern Gold at the Holt mine from the Garrison pit? The recoveries there were 96.5%. The company at the time, this was a predecessor to us, it mined the open pit there. It hauled the ore to the Holt Holloway mill and at the grade of just over 1.5 grams per tonne and had 96.5% recoveries from that material. The resource conversion rate, I understand this would be referring to converting resources from inferred to indicated. We'll see how that we'll see how that goes with the current infill drilling program. We've just commenced that. We have not done any resource updates now, but we have been given some guidance. We put a press release out this morning which showed good results from infilling. Our geological model appears to be holding up well. We appear to be converting resources at a good rate, and we'll confirm that later next year when we update the resource, and we'll continue to give the market guidance on that. There's a significant amount of results still to come out, and there'll be a continuous flow of drill results, notably from good areas, over the coming year. The next question is, can you see any potential areas where additional near-surface mineralization exists? Yes, there is. The significant upside. We've only drilled out 9 kilometres of a 17-kilometre strike length at Got Tower. Earlier in the year, we did release some exploration drill results. We had some significant drill results up to 500 metres west of 55. That's in the west. We had results up to a kilometre east of Windjammer. That's in the eastern part of Golden Highway. We also had significant results in and around the Garrison pits, notably Garcon and 903. So we see significant upside just in and around Tower Gold, as well as mentioned, there's the Gold Pike and Bafonta areas that were historically mined outside of Tower, but within trucking distance. These are within, 10 to 15 kilometres with good grade, good historical results, and we'll give some guidance on that over the coming year as we develop those projects. The other question is about the outlook for the joint venture with Agnico Eagle. We have a large area in a joint venture, 9,000 hectares in JV with Agnico Eagle. We are in discussions with those to move on some of that ground and to get some work done on that ground and potentially some ground swaps as well. So we are in discussions with that. We're hoping to move that forward. At the moment, those joint ventures are not being operated. They have not been operated for a number of years. There's been no work done on them, and that's the way it stands at the moment, but we're looking to change that as we move forward. Would you plan to doing a bulk sample? Yes, we would. So that we're looking to do that decline. We're looking to have that developed under an advanced exploration permit. We could fund that with flow through. We don't need a full permit, an EIA to complete that. So we are looking to do that. Do some trial mining, drill out the underground resource, and do some bulk sampling underground to confirm mining methods there. So on that note, I think I've answered all of the questions, and I think I'm an hour out of time. So thank you very much. And if there's any other questions and anyone wants to take a meeting with us, please book those meetings, and we'll look to have those meetings today or tomorrow. So thank you.